All right, good morning. My name is Don Deyo. I'll be taking you on today's money market review. Please, if you can hear me clearly, can you please send a message in the box? Just type a yes if you can hear me clearly. Very much. So that means my audio is clear. So we'll start off our analysis by looking at the fundamentals. Now, as you may already know, today is going to be a very eventful day with a lot of lined up. It's a very special day for us traders. So let's start off by looking at the calendar to see what we have in store. I'll be sharing my screen. So I'm using Forex Factory. For those of you that who want to join, you can also, I want to believe you can see my screen now. So this is Forex Factory. And today being Wednesday, the 12th of June. So we are looking at the calendar. Now, earlier this morning, we had the news on the British pound, which was now that news turned out to be expected. That is why you may not have noticed any serious movement on any of the crosses as the pound. But later today, we have the news on the US dollar by 1:30 p.m. We have the core CPI, PI, and then later within the day by 7 p.m. we have the rate decision and also the FOMC statements. They can see that today is filled with a red impact news. So all throughout today is going to be very volatile. So what normally happens before events like this, the market goes silent. So there's a very high tendency that from now till around 1:30, you may not see any movement in the market. Market might just be calm to 1:30. So these are the news that we're expecting. Now, if you look at the CPI, note that the major numbers that we are interested in is the CPI year on year, the CPI year on year, and then followed by the CPI month on month, month over month. So it is forecast. The focus is that it's going to be 3.4, which is the same as the previous. So forecasting that the CPI year on year be exactly the same as the previous. And it is this number that the Feds are looking at to decide whether the interest rate should be held or it should be cut. So we are currently in a cut cycle. The central banks they are going to make that decision based on the numbers that we see falling in from here. We see from last week a non-farm payroll and the data that fell in last week that the labor market is still very strong, very, very strong. With that labor market, there's a tendency that Fed may not be cutting rate anytime soon. Possibly, it is estimated that by September, the rate cut should. But all that will depend on what the numbers of will show today. So today's events are very impactful and they need to be traded with caution. So let's now go to the technical analysis. Like we said, there may not be any movement, any serious movement on 1:30. That news will be released. So let's now check what we have on the technical level. I'll be sharing my screen again. So we'll start off our analysis by looking at dollar index. So this is sorry. They just give me a few minutes. Let me set up. All right. I want to believe you can see my screen. So we are going to start off the analysis by looking at the dollar index. Now on the index, we want to see what okay, so I am currently on the D1 time frame. So I'm looking at that daily time frame. And let's do some very quick analysis, what we see, the dollar. So we can see that most part of last month, the dollar was bouncing. You can see in the month of May, we had a dip in the dollar. But if you look at the overall trend, clearly tell that has been in an up. So we've been trending up for. So we've been trending up for high now. If I draw a trend line starting from down here, and see my trend line that on the dollar index, actually an uptrend, even though we had a break below trend line. That was forming or giving us low of the month. So now we push back above our trend line and haven't broken below the low of last month. What I mean by low of last month is referring to this level. Level was the low price coming from the previous month. You see that we broke below that level. Then we have pushed all the way up. Now, since the NFP, this movement up is part of NFP. NFP, after NFP, we've not seen any serious move. So I am anticipating that there might be a retracement. Look closely, you will not, sorry about that. If you look closely, you will notice that we have a gap on the dollar index. Gap here. Now, what I mean by gap, I am referring to this space. So a gap on the index, which is most likely going to be what we see. Now, we can also see this massive candle. Now, whenever there's an expansion, there's always a retreat. Yeah, so the market will retreat to a certain level before continuation. Now, I usually would use my Fibonacci to measure the extent of that retracement should be expected. So if I drag my fib from below of that move to the high of that move, then I will be expecting kind of retracement of this nature before we proceed higher. That is what I will be looking at. So kind of move to the downside before we continue higher. That is on the index. But as we all know that because of the news events that we're expecting today, the market since NFP, since on Monday, has not really given us any clear direction yet because the market has not really moved. A lot of traders and investors are looking at this week, looking at the news that are scheduled, and some of them are very cautious. In fact, virtually all the major traders are cautious about the market because of the news events that we're expecting. So, but technically, we should expect to see some form of retracement on the US dollar and then a confirmation. And that is not to say that we cannot just continue higher from it. But letting you see is if we trace down to around the price of, let's say, 104.400, if we retrace to that region, then we need to look for things to go higher at that point. Note that FOMC data this evening, and then the CPI is in the afternoon. So these two events can cause the dollar to move down and go up. For instance, if the CPI turns out to be negative dollar, then you should expect that the dollar will depreciate massively. But it is possible that that CPI may be negative and the Fed might decide to hold rates. If they decide to hold rates, then you will see that the dollar will appreciate. So those are the two things that cause this event to occur. If the CPI is negative, then dollar will collapse. And if later in the evening, notice that the Fed, even with the negative CPI, has to hold interest rates, and we will see the dollar appreciate. So the outcome of the event, nobody can really go to know the numbers. And currently, right now, it is those numbers that will determine how the market will move. But on a technical basis, like I have said, I will be expecting a retracement to around 0.400 on the index, or we hear from that region. So our going up, now you notice that we have a level of resistance around this area, level of resistance, which we'll be looking at, likely would pose as a challenge market or to the price higher. Distance needs to be broken for higher. So if we successfully break above that resistance, the tendency that will go much higher. And now, but if we do not break above, then it turns out that we fall below, we fall down to the trend line, then I'll be expecting move to the. Now, if you notice what I have drawn here, like some of us will know head and shoulder pattern. So this here is a classic head and pattern where the market creates high, falls down to body so that it's early, and then there's another high up here. Please, there's someone that is person. Please mute yourself if you are not asking me. And then, so please take note of what I'm drawing here. So this is the head and shoulder pattern. And
your voice is breaking. Your voice is breaking, sir. Thank you.
all right. Hello, can you hear me now? I think it should be network. Please, if you are having difficulties hearing me clearly, you can indicate. I know I check my audio. If you have any difficulties hearing me, please just send a message. Someone is saying my audio is. Please, if you can't hear me clearly, try to change your position where you are staying, so that the network line was also disturbing. All right, yet I'm seeing that it's clear. So you can see what I have drawn on my charts. Now, what I am just showing you here is the classic head and shoulder, inverse head and shoulder pattern. So which means, so what I'm trying to let you know is that there's a possibility the dollar creating the right shoulder at this point. What that means is we drop down to create the right shoulder before we move all the way up. What I am expecting on the dollar index. So from what I have said so far, you can see that the directions are not very clear. Direction on the dollar index is not really very clear because we had Monday, Tuesday, and today being Wednesday, it hasn't really moved to have given us a clear direction. So, but notwithstanding, anticipating a retracement on this move up and then a continuation to the upside. And one of the confluence I have is the fact that I'm expecting it to retrace down to So these are the confluence I have. The first one is that I'm expecting a retracement down to the trend line. Expecting a retracement to fill up this move. So because every time there's an expansion, there's usually a retracement. This retracement is going to be around 1.8% of this entire move in the Fibonacci. That's number 2 confluence. Then number 3 is the fact that move down help us build our inverse head and shoulder pattern. If that is done, then we have a confluence. So anytime if the market moves down, we are looking at this through movement to the trend line, retracement, the expansion that number 2, then a formation of the inverse head and shoulder. That happens, then we'll be buying US dollar point onward. So the summary is that there's a possibility of retracement and then expansion to the upside. How it moves will largely depend on numbers that are dropping or the numbers that will drop from expecting today. That is it for the US dollar, for the dollar index. So let's now quickly look at Euro USD, Euro USD, full of other currencies. So let me pull up the Euro USD. All right, so this is Euro USD H1. So we are looking at H1 and Euro USD. Now you can see information we have, movement to the downside. This massive move as a result of NFP. Now this was a break trend that's on for days. So if I zoom in on my chart a little, you notice that there is a trend that has been on for a couple of, and that trend has just been broken. If you look closely, you see that from the month of May, from the month of April, had this continuous move to the upside. Now I am on D1. So what that means is that each of these candles. So we have this continuous move to the upside, and now we can see that we have broken. So this year was a break of this channel, and if you look at this pattern, and is referred to as a wedge. So you can see that we have broken this. Now, usually what will happen is that whenever this pattern occurs, where you have a move to the downside, a sharp move to the downside, consolidated move or a consolidation, and then a drop, the market will usually drop to around this region. So on the Euro USD, there's a possibility that we might move down all the way. Now, have in mind, take note that last week, the ECB cut the rate on the euro. For a long time, the euro has been the interest rate has been very high. Last week, the interest rate was stopped, and that is one of the reasons why the euro experienced a massive drop. And so for this week, the dollar is also expected, the decisions taken on the dollar. So we will see if we continue lower, but if we are to continue lower, then I will expect that the movement down will get all the way to this point. Please give me a few minutes to go through the charts. One is saying no sound. Okay. Okay. Is it clear now?
Lower than your voice now.
Hello? Can you hear me now? Is it clear now? Hello? Okay. All right. So this is what we are expecting on the okay. Volume is fine now. All right, that's good. That's good. All right. So for the euro, we want to see a continuation to the downside because of the pattern that has been formed. Now take note that I'm looking at the daily D1. So on the daily time frame, we see that I'm just repeating what I had said earlier. On the daily time frame, we once had what you're seeing here, we had a push to the upside for for almost 2 months, we had a push to the upside. And then NFP came, and then we can see the massive drop in the euro. Like I said before, we are expecting to see a continuation all the way down to this particular region. That move down largely depends on the outcome of today's news. And for now, the direction on the Euro USD technically is to the downside. We expect a continuation to the downside. That will largely depend on the event for today. Because after NFP on Friday, you can see that market didn't really give us much reasons or much evidence or much reasons to anticipate anything for now. Because Monday and Tuesday, market was almost ranging, was ranging. There was nothing serious, so to tell. So right now, we will be expecting a continuation down on this guy. So, but we also notice that there's a gap on Euro USD. Let me just that gap. You can see this gap on Euro USD. Now, with this gap here, there's a tendency or there's a possibility of a fill up. So we might most likely see the move to the upside to fill up this space before we continue down. Take note that what I have just described on Euro USD now, the same thing we saw on the dollar index. The possibility of a retracement on the move that happened on Friday, or we continue lower before we continue higher on the dollar index. Euro USD now, we are seeing almost the same scenario, but inverse. On the Euro USD, we might likely have a push to the upside, is to fill up this gap, or possibly around 61.8 retracement of the move that occurred on Friday before we continue our push downside. Now, take note also that we just broken the trend line. Now, so the line you see here is a trend line on the Euro USD that has been on for almost 2 months. So, but we have broken that trend line. It might be a retracement all the way to 1.8 move retracement number. If I draw my fee for high here, which is this current move low, which is the most recent low that we are seeing now, then I should expect our 61.8 should be around this region. So I will be expecting a kind of move nature. Yes. So these are massive moves, which is very possible that something like CPI can create or can cause such a move, massive move in the market, or what passing here is very massive. And it is also very possible that the movement then can also occur. So these two movements can occur one day, because we have the CPI and then the interest rate decision, which is FOMC projection and all of that. So these are massive moves. So let me quickly look at the question that someone just asked. Okay, someone is asking, is FOMC news in the evening going to move the market? Of course, it will move the market. Is there anything that moves the market more than FOMC news? That is the reason why the market hasn't moved throughout this week, because of the FOMC. And the decision of the FOMC will depend on what the CPI numbers that falls in from the. That is why today's trading today should be done very cautiously. The FOMC news is a very massive movement. So it's actually by 7 p.m. That's the FOMC. And CPI is around 1:30. These are crazy events. These are major events in the markets that will be occurring today. All right. So the Euro USD now, I said I would be more comfortable selling the euro than buying. So I'll be much more comfortable selling Euro USD than buying. What that simply means is that I would want to see a retracement to at least areas of around 1.08500. What I mean by that is I want to see a retracement all the way up to around this region. Let me just mark this point out. So I want to see a retracement all the way to this particular region. Let me mark this part labeled in red. So you can see that area labeled in red. So I want to see a retracement all the way to that region, or I will be comfortable selling. So like I said, some individuals who are aggressive can decide to buy from the current market price where we are all the way up there. But just like I said, you need to trade with caution. But today is FOMC. So I would rather prefer to sell than buy. That is on Euro USD. I'll be comfortable selling if the market is all the way up to around this area. Yes, so if the market gets to this area, then from that region. If it doesn't, then just look for another end some other day, some other time. But today, I'm expecting this kind of move. If this move occurs, then I'll be confident that we will most likely stop, and it all depends. So why I'm saying so is because there's a possibility that the CPI might be negative for the dollar, but the Fed may not want to wait. They may still want to wait much longer for the next CPI to give the same reading. That is what I'm saying. So if CPI is negative, the Euro USD will be pushed up. You will see that movement up. But if the CPI is negative, evening, when we now have the interest rate cuts, the Fed may not want to cut rates from the reading of one single CPI because of the reimbursed job data was released. Because the labor market is still very strong, they may want to see another CPI give a negative reading. So with that being said, unlikely that they will be cutting rates even if the CPI is negative. But if they do not cut rates, then you will notice that CPI moved Euro USD all the way up to where I have identified. There's a tendency that it falls from that region. So, which I said I will be more comfortable selling Euro USD than buying. Now, all of these are analysis. These are just tokens. But, numbers is what we determine. So the thing is, from what I see about the whole analysis of the CPI, and that if the CPI is positive, the tendency that the rate will not be cut. If the CPI is negative, the tendency that the rate will not still be cut. They're likely to hold rate whether the CPI is negative, because they will most likely want to see a second reading on the CPI to confirm what today's CPI will be before they start. So that is for Euro USD. Like I said, I'll be much comfortable selling from the region of 1.08500 all the way down to wherever it takes. All right, so let me quickly look at the questions we have on the chat. So I have some questions on the chat. Someone is saying that he has a sell limit at he has a sell limit order on Euro USD at 1.0819. Okay, that is a good one too. You can do that. You can do that. So you can do that. You can have a sell limit at that price. Good one. It's a good one. Now take note that with the kind of news we're expecting today, first entries, in my opinion, would be sell limits and buy limits. Yes, because uncertainties. So another person is saying, how do you know when FOMC has ended meeting and the conclusion of the meeting has, okay, now for you to know what is actually happening, I have never missed the FOMC meeting. So that time you will follow up on YouTube. If you go to YouTube, type FOMC meeting, FOMC live meeting. So just put FOMC live on YouTube. You see the statement of the man, when they are making their press conference, and also the analysis of the economic projection. Just type FOMC live on YouTube. Watch it real time. And then this will also help you in the sense that you will see the statements this guy is making or the comment he's making, how the market is reacting to those statements. Immediately he speaks, you will be able to see. So what you do is, as you are watching, you should also have another screen where you're looking at the market to each of the words that he's saying. That will help you so that next time you know what to expect when they speak. But somebody who wants to follow up that FOMC, it is by 1:30. You go to YouTube and type FOMC live. YouTube take you to the page where you'll be able to watch it live. It will also be responding to questions. Journalists will be there, bank analysts will be there. They'll be asking him all the questions that are necessary. They will ask him, and then he'll be giving answers. It's answers to those questions that cause the market to expect you. So you can check on other forex like this is okay. Yes, so you can also check CNBC, but I personally use YouTube. I just go to YouTube and then watch live. Someone is saying, do you mean that CPI is negative, FOMC? Now, FOMC, what I mean by FOMC being positive is the rate. Remember that there's another news that we going to be on rate increase, that the interest rate should be increased or decreased. So the CPI is what will inform their decision. But what I have said is that if this CPI is negative, yes, it will push the US dollar to the downside. But it is not going to be enough reason, the FOMC or for the Fed, interest rate. So you might see that the CPI is negative. Then instead of cutting interest rate will be held, kept the way it is. Those are the two things. So it's either they hold interest rate or they cut it right now. So nobody is talking about increase. They're holding the rate or cutting the rate. And so if CPI is negative, tendency that they might want to watch X number. They may not be cutting the rate just based on this single news of CPI that is coming up, because the labor market is still very strong. And if the labor market is strong, that is inflationary. It means that there's a tendency for the inflation to still be high. Remember that the essence of the CPI is measure inflation. That is, so they are looking at CPI, they are looking at inflation. The inflation numbers are calculated from the CPI. So there's a tendency that even if the CPI is negative, the interest rate might still be the same. FOMC is 1:30. FOMC is 7 p.m. CPI is 1:30. FOMC, I'm responding to this, is 1:30. How do you trade FOMC? Now, the best way to trade FOMC is with pending orders. So you use pending orders to trade FOMC. You do not want to place instant execution. Also take note that FOMC is a projection. It's a comment. This is a question and answer session. Depending on the answers or the comment of the president of the Fed or the governor, the Fed governor, depending on his comments, market will fluctuate either up or down. So it is a very dangerous game to play. But if to trade it, then be using pending orders to enter your trade. If FOMC is increased, now listen, FOMC will not be increased. FOMC is the commission, the individuals that takes the decision. What is going to be increased is rate. If you look at the Forest Factory, you will see the other news, high impact, that is labeled as rates, tax rate. That is what would either be increased or decreased. It is The FOMC means the Federal Open Market Commission. This is a group of individuals that will take a decision. So it is not FOMC that will be the interest rate. FOMC are the individuals that take the decision to either increase the rate, reduce the rate. I don't know if that is clear. So I think I've responded to chart of NZD-USD. For the whole of last month. So for last month, the market has been pushing up. So that if I draw my trend line from the last month, I see how steadily it's going up. But with the NFP that was released on Friday, you can see now that we broke the trend line and then down. Now, there's a tendency that we might retest this trend line. So this is the trend line. So there's a tendency that we might retest this trend line. Now, among all the instruments that we are looking at, NZD is one of the currency pairs that NZD is one of the currencies that have shown strength this week. Monday, you can see Monday and Tuesday, there was a strong movement to the upside on NZD-USD. Now, there's a reason for that to explain. So if you look at that, you can see that on Monday, I want to believe you can see my cost. On Monday, we had a push to the upside. On Tuesday, we had another push to the upside on Tuesday, and today is being Wednesday. Now, the reason for this is that the New Zealand is one country that still has rate increase table. They are still likely to increase interest rates. And that is one of the reasons why the New Zealand dollar is strong. Because the last time the old NZ governor spoke, mentioned that there's a likelihood of a rate increase. So with that being said, New Zealand dollar has sentiment. So that is why among all the currencies that were affected by NFP on Friday, the New Zealand dollar is one of the currencies that are shown forward. There's a tendency that we might see a continuation to the upside. NZD-USD. We will be expecting this to up much higher than on Euro-USD. So possibly even high above our trend line. So I would not suggest a sell on NZD-USD. I will even rather be looking for high NZD-USD. But just like I said, today's news is very crucial because it will affect all that the market is doing technically. So we want to be patient and very cautious. Trade markets. This is some of the levels that we want to look at. So the tendency that on NZD-USD, we might fall down. I'm saying is if we fall based on the news to around this region, I'll be much more comfortable buying NZD-USD from point onward. On NZD-USD, I am going to be anticipating high and not. Now, one of the reasons why this is so is we know very well that in the market we have currencies termed at risk currencies. Some currencies are referred to as risky currencies. What that simply means is that whenever there are about the dollar. These are the currencies investors will now run. Currencies are steady. So in times of turmoil, when there is a market uncertainty, just like we have during this week, a lot of AUD has been strengthening, NZD has been strengthening. These currencies are risky assets. At present, investors are risk on mode, what we call risk on. So on mode simply means that they are willing to take more risk. And so by so doing, they will be buying currencies like AUD and NZD because these are considered to be risk currencies. But once there is a clear direction on the US dollar will appreciate currencies. So with the uncertainty about the US dollar right now, because of the rate increase and so forth, also putting into consideration that the election US dollar is on the dollar, the election in the United States is almost on the way. There's a tendency for currencies like UD and NZD to appreciate. That is why you are seeing that UD has appreciated on Monday. I mean, NZD appreciated on Monday, also it's appreciated on Tuesday. So among all the currencies that were affected by NFP, NZD is one of the currencies that in strength. The tendency that might continue higher. Just like I said, I'll be much more comfortable buying NZD USD around this region you are seeing here, around the area of 0.60500 area. It's not a simple giving you a zone, a particular zone. So within this zone, I believe you can see my chart clearly. I'm much more comfortable buying NZD USD from around this area. If you are thinking of buying or trading NZD USD, then I would suggest that is to buy because the fundamentals supports buying of NZD USD. All right, so let me quickly go through the questions again. So someone is asking, how long should someone stay in a trade while trading FOMC? Now, FOMC is not the news. Numbers are released. FOMC is a speech. This is a speech. It's actually a question and answer discussion. So you shouldn't even stay in a trade when there's FOMC. FOMC is an in and out trade. So if you enter the trade, 10 pips, 15 pips, you are out. 10 pips, 15 pips, you are out. So you are not staying in for long because you will see how the market will move up and down. Because questions will be asked, and as the Powell answer these questions, depending on the answer he gives, market will fluctuate either up or down. The market can go up, then he will give a reply to a certain comment, then the market begins to go down, goes down very sharply, and then he's responding to another statement and he says something that is positive, it begins to go up. So it is not an event that you stay in the trade for long. It's a sharp trade. As you go in, take profit, come out. You want to go in again, 10 pips, you are out. That is FOMC. It's not a number. No number will be released like other news that we know of. How do I get the news of CPI? If it's negative or positive. This question is not very clear. This question is from Flora. Please, how do I get the news? You can take the news on Forex Factory. So if you go to Forex Factory, so you're asking if it's positive or negative, read the news. Like I said, your best bet will be a pending order. So from the current market price, for the news, 10 minutes, 15 minutes before the news, pending order, buy stop above, a buy stop above, sell stop below. With your stop loss, both of those orders at the current market price. That will be your best way to enter the news. Will there be a class for CPI in the afternoon? I'm not sure about that. I don't think there will be any class on a CPI in the afternoon. How do we get signal to trade the news? Don't get any signal to trade the news, sir. What we have said now is what we use trading the news. Set pending orders in the current market price few minutes before the news. For instance, like 10 minutes before the news, set your pending orders, buy stop above. So now, if you do not know how to set pending orders, go to our YouTube. You can even check on YouTube, look for videos on how to set pending orders. Is there going to be physical meeting? There are no classes today. It's public. If someone wants advice on a trade that is already, please, can I get all right. So now let's look at another instrument. One of the currencies instrument we want to look at will be USD. For those of me opening USD card. All right, so we are now on USD card. Quickly, we'll look at what we have in store on USD card. So for USD card, we can see that the same movement we anticipate. So after F1, after movement, after the NFP on Friday, you can see that there's been a mild retracement on NZD card. So there's a possibility of a retracement on all the currency pairs that we have looked at that has the US dollar. So if I draw my fib, so what I will be doing here now, I draw my fib from this bottom down here, which is the end of that move, all the way up to the end of that move. You can see that there's a tendency for us to retrace to around this region. This retracement will be around our 61.8% before we push higher. Now, this region that is 61 turn out to be area of support for USD. We draw this level from this point, that this here is a level of support. Now, how is it a level of support? If you see the previous days or the previous periods when the market hit, you can see that the market fell all the way down. Now, if I extend it into the past, if I extend this level into the past, when I extend this level into the past, we are still now at the support. So these are our support at 61 points. So you see when the market hits that level and it drop. Now, for a true support to be broken, the market needs to break the true support. So anytime you see an expansion like this with a certain level, know that that level is either a support or a resistance. So in this case, once a resistance, for the market to break through a resistance, needs this kind of impulse, that movement away. Then when it returns back to that same level, it needs also an expansion, very massive move to break below it. I see every time the market comes back down to this area, it's not breaking it, it's just a sluggish movement. If you see a level that is broken sluggishly, then no, that's not a real support or a real resistance will be broken with very massive pulse move. So in this instance, there's a tendency for us to see a retracement to around 61.8 Fibonacci of the 5 days move or pulse move. It retraces down there, then might likely up. All of this is in line with the analysis we've done on the dollar index, possibility for the dollar to pay, and then because the possibility that CPI can cause the dollar to drop, and then later we see appreciation in the dollar. All of these are an analysis. So for the USD card, I would be more comfortable buying USD card from around the region you are seeing shaded red, which is the area of so from around 1.37060 all the way to 1.36940, 1.36940. Within this area, which is from 1.37060 to 1.3696. This is the area I will be much more comfortable buying USD at. So, like I have said earlier, I would not suggest a sell on the dollar. I said. So quickly, let me go through the questions I have. So if you have any questions, someone is saying my voice is breaking. That should be network. I have no power over that. So please, if you have any questions, drop your questions so I can answer them before we round up. The flyer was sent to me by in your Right House. All right, I don't know about that. Right House is in Lagos. I am in Port Harcourt, so I don't know if there's in Port Harcourt. We do not have any seminar today. I don't know if there's any in Lagos. Find out from your account officer. Why is there always pending when it is exactly time of the this is what please, your question is not very clear. You say, why is there always pending? Pending what? When it is exactly time for the news. Please make your questions clear so I can answer you. Yes, you said, why is there always pending? I don't know what you mean. Why is there always pending? The network is breaking, so we are hardly getting the zone. Okay, someone is suggesting that okay, so any JPY pair, fine. So I'll quickly look at them. One of the JPY pairs, although our time is fast running out. Now, if you can review USD and also network, you mean PH office will be closed? Yes, PH office is closed. We are closed for the holidays. Okay, so what we see on Euro USD is likely also going to play out on Pound USD. But let's quickly look at any one of the currencies with JPY. So let's look at Pound JPY. So let me look at Pound JPY. So our time is almost fast, and we have just 5 minutes left. So let's just quickly look at Pound JPY. All right, on Pound JPY, we can see a continuation to the up. Listen, guys, Pound is a very strong currency as the euro. Now, the only setback that the Pound would have is the elections that are about to come. But besides that, Pound JPY, the buy. All you need on Pound JPY, wait for the currency to give us a form of replacement. For instance, here would have been a very nice opportunity for us to buy Pound JPY. Right. So, but right now we are almost at a distance. The market has pushed up heavily. At where we are currently, it's going to be uncomfortable to buy. Where we are currently, we will not want to buy from. Best for us to wait for kind of retracement before we jump in to buy. Now, most times when there are news on the dollar, like we have today, even though the news will affect every other currency pair, it is usually best to trade currencies that do not have the dollar in them if you must place a trade. Your trades would have to be on till the news. So it's sometimes best to trade currencies, trade the proxies. Proxies are those currencies without the dollar. Or Pound JPY, buy. So if we are to trade or buy Pound JPY, rather wait for kind of retracement, possibly a push to the downside, where we are currently, it's going to be difficult for me to place a buy there because it's very high. The price is high already. Remember, logic in trading is that you must find ways to buy low and sell high. So even when the market has hit a high, you have to wait for it to retrace. So the placement to any of the low regions, like around 200.335, appropriate. If you will see a retracement to that region, now this is today's move. This move today, we would have been able to buy on any of the retracements. So you can see this movement to the downside. If you had seen this earlier, you can buy. If you are also online, when this moved to the downside, now we have pushed higher. anytime you see a retracement, now from early this morning itself, look at this red candles to the downside. These are opportunities to buy. Anytime you see a retracement to the downside, you can place a buy. So these are opportunities, but right now we are pushing higher. So you can still wait for a retracement. Before today runs out, might be a retracement that will enable you to go to the market and buy. So I think, okay, the question once again is, notice that during the release of First Friday news, I found that my actual was reading, if this morning, you said your actual was reading pending. Your actual what? Is it on the calendar? Now, if it's on the calendar and it was showing pending, then you refresh. You refresh. If you are looking at the calendar, Red Factory calendar, then the news is about to be released, then you notice that it's showing pending. What you need to do is refresh your browser, and then I don't know if that is what you mean, because you just said you found that the actual was reading pending. Fine. So if the actual is reading pending, you refresh. So someone asked, can you please show us how to draw Fibonacci? To draw Fibonacci retracements, that would be, okay, let me just quickly show you how we draw the Fibonacci retracement. It's confirmed from people. All right, so let me quickly show you how Fibonacci. Now, I will not go in depth. I'll just have you how it's used. Now, Fibonacci is actually used to measure retracement. That is, so if there's an impulse move is any sharp, rapid movement. For instance, this candle, look at this movement to the upside. Take note that the whole of this movement to the upside, there are no red candles in between. There are any, very few, which means I'm looking at the M15 minutes time frame. Means if I switch to H1, most of these candles will just be green candles, one green candle or two green candles. So you notice that anytime we talk about an impulse move, we are referring to very sharp, rapid movements. We are referred to as expansion. So Fibonacci is used to measure the retracement of those expansions. The theory is that anytime there's an expansion, market will usually retrace to at least, at most, 61% of the previous move. So if the market moves from point A here all the way to point B, the theory states that there's likely going to be a retracement to at least, the least would be 50%. So what that means is if I draw my Fibonacci, so in an upward movement like this, where there's an expansion to the upside, your Fibonacci is drawn from the low to the high. So if I draw the Fibonacci from the low to, look at this, I've drawn it from the low to the high of this impulse move. Now there's going to be a retracement to at least percent. This level you see here is, so this also is 61.8. The Fibonacci had some numbers which we refer to as golden ratio. 61.8 is one of them. Then we have 22.8%, and then some other numbers. I personally use 1.8. 50% is just the midway. So you notice that the market has retraced to the midway. Now, if you are to take a trade, this is the sweet spot where you now consider buying. So you don't buy at the tip. The essence of using the Fibonacci is so that you don't trade at the peak. So you do not buy, often you do not sell. You want to wait for the market to retrace because there will always be a retracement before you go. That is the whole idea of using the Fibonacci. That's just the overview of how it's used. It's used to measure retracement. So anytime there's a massive movement, impulse move, you can measure the extent to which there's going to be a retracement. Also, you can use the Fibonacci to measure after the retracement, expansion that is likely to. Remember that all of these things are projections, not absolute. They are just projections. They aid you to take decisions. All right. So I think that will be all for our class today. Someone is asking what time frame is best for you. There's no best time frame for you. Actually, you can use any time frame. And currently, I have just used M50, use H1. You are looking for massive movement. This impulse move being on all time frame. So depending on your style of trading and your preferred time frame of trading, use to take your or to take trades. So there are no best time frames. You can use any time frame. Yes, individual retracement. But retracement does not require a time frame to occur. All right, so I think that will be all for today's lecture. So I want to thank you all for time, always being there with us. So whenever if you have any questions, you can go to our YouTube page. This session will be uploaded. If you still have further questions, always reach out to your account officer or trainers in your centers. My name is Don Dale, and I'll see you some other time.